Good morning, guys. Hope you're well, and welcome to another video. So what I'm going to just go over in this video is a trade that I took this morning. It's Monday morning on USDCAD. So I took the trade in the London session and it's still running. I did take off half of the position and now I'm waiting for 1-to-4 ratio to get hit. But then I also want to show you another opportunity that there was that I didn't personally take, but that you could have taken with the smart money, concept or way of trading. So the first thing that I looked at this morning was just a 4-hour breaker structure. So right here, you can see last week we had a very nice impulse to the upside, breaking the previous 4-hour structure. Now, what happened here was we was in this range for a long time, like a few weeks. We're trading in this range. Then we broke to the upside. And I was actually expecting a larger move to the upside, but it never happened. And then we broke back into the range, dipped back below the range, and then broke into the range again. So now we basically still in the range. But what happened was we created, and this was last week, we created a lower low. And after the lower low, we created a higher high. And that to me signals reversal. So we were in a semi downtrend. Yes, a low, 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 high, low, 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 high, low, low. And then after this low, low, we got a higher high. And I'm expecting the higher low. So now all that needs to happen is we need to kind of anticipate where the high low is going to form. So I did mark up this zone down here on the 4-hour as a demand zone or possible buy zone. But then I dropped down to the 1 hour. And what I saw was, okay, so as you can see, this thing is rewinded now. So I'm going to play it forward as I took the trade. So we have this zone down here. Then, we have, maybe we can refine it to like right there. So we have this zone. And then we also have an aggressive buy zone that's sitting right here. And this is basically the last bullish candle before the break of structure to the upside. Now, technically, this is also a bearish candle, but this is also a bearish candle before the break. But the only thing with this is it's already been mitigated and violated. So we can kind of expect the market to dip down all the way to the next demand zone. And that was sitting right here. And even if we just get a reaction from this demand zone, it doesn't even have to, create a whole new move to the upside. Even just a reaction, we can expect at least like 30 to 50 pips. So, at least 30 to 50 pips, even if it gives us 50 pips, that's a good move. And because actually we're just day trading or scalping, or that's my strategy. So I waited for the market to push into that zone. And now what I'm going to bring into this video for you guys is just another Confluence that I use, and that is the Asia range. So for those that don't know, the Asia range is basically created between 3 in the morning South African time and 9 in the morning South African time. And the high and the low is then the Asia range. So what happened was we dipped down. This was, so the time now is 7, 8, 9. Okay, so right there, on the low time frame, we're going to have a look at the Asia range. So remember, we're sitting in that demand zone, going down to the low time frame, the 5-minute, for example. We can draw up this tool. Now, basically, this is just the tool is called, let me just check here exactly the name for you guys, the Asian session range. So that's the tool's name, and it basically just gives you this high and low point, and that is your Asia range. So remember, now we're in this higher time frame demand zone. We have the Asia low and the Asia high, and what the market likes to do is it likes to take out the liquidity or the orders above and below the Asia range. So that, for example, if we are in an uptrend and it takes out the Asia range low, that means that there's a high chance that it's going to attack the Asia high, because now it's already liquidated all of the orders at the Asia low. So that's just another Confluence for you guys. So what I was looking at is this Asia low to get taken out in my demand zone. And that's what happened right there with these 2 weeks. And then we broke structure on the 5-minute. So the structure break on the 5-minute was right here. So right after that break of structure to the upside on the 5 minute, that's where I started to look for my entry position. So where am I going to take my entries for the London session? So London session, basically, London session basically started at 10. So between 10 and 11, I'm looking for my entries. After 11, it's kind of a bit late. So I would prefer between 10 and 11. So I drew up this order block for myself right here. And that was my entry zone. So that's where I look to enter. So as you can see, like I basically just waited for the market to push into that. I didn't use a limit order, but I did just put in my position, and I had a 10 pip stop loss. I could have even had a 5 pip stop loss if I really wanted to, but for this one, I just used a 10 pip because I was aiming for 30 pips TP1. And that's actually below the Asia high, but that's my TP1, and my TP2 is about 40, and it's also just below because I'm expecting that wick and then the drop, but it does sometimes reverse just below the Asia range. So again, it's just a confluence. You can't really build a strategy out of it. It's just another confluence for you to use and also to set targets. So that was my target, or this is still my final target, but this was my first target. And then I just basically waited for it to tap in, and we got a very nice tap into that. I'm just going to hide this Asia range. So we got a very nice tap into the order block, very nice reaction, and then it pushed up, and it did targets relatively soon. Like this was, I got my entry 10 minutes after 10, and the exit was about 30 minutes later. So, and that was for 30 pips, so 1-to-3 ratio. Stops to break even. So I put my stops to break even, and it's still at break even. And we had a nice dip down to the lower side and another reaction to the top side. And now we're sitting, quite high again, but it doesn't look like it wants to break now, but my stops is still at break even. So if it does come down, it's just going to hit me out at break even. Now, the second entry opportunity, if you wanted to, you could have taken it on the 1 minute. So remember, the first entry was because of a break of structure right here. And then we had another break of structure right there on the 5 minute. So then you could have used the same method, and that would have been just to use this order block right there. And then you could have actually refined it and taken an entry on the 1 minute. So the 1 minute, you're not going to get that many entries on there, but if you do get an entry, it's going to be a solid entry. So the 1 minute entry would have been right there on the 1 minute order block. So look at that sniper entry that you could have gotten, and have a like 5 pip stop loss, and you could have targeted again 1-to-3, 1-to-4, and 1-to-5, and your 1-to-5 would have gotten hit. So that would have also been a very nice trade to be a part of. Now you can even, if you're still targeting the Asia high, you could even have like 1-to-10 on that trade if it does play out. But I would recommend to still lock partials as the market goes in your favor, just because you never know how far the market's going to go in your favor. So yeah, that's basically the trades that I took today, or the first trade that I took today. It's still relatively early, so I'm going to look for more trades this afternoon. But again, it's just confluencing the the order blocks, the liquidity zones for the Asia session range, so the Asia high and low, and then waiting for the break of structure on the low time frame, the 5 minute. And again, order block on the 5 minute, and that was my entry. And I just took it up to 1-to-3 ratio so far. So yeah, that's it, guys. But I hope you learned something. And let me know if you guys have any questions. Cheers.